January 15th, after the market closed, Dow was down 300 something today, and S&P was down 40 something today, new lows, new 52-week lows, etc., etc. I'm going to make the argument for an asset rebound here. Looking at the positioning report, let me start by saying stocks are not showing speculators short at all. They've gotten out of some of their long positions, maybe 20% of their long positions, but they're not massively short to the point where I think there's going to be any kind of huge move up like we were back in August. And that makes sense when you hear people talk. Yes, they're talking about the market can go down more, but it's a buy down there. Where's the bottom? Where's the bottom? They're still kind of talking that, so it's kind of like they're holding and hoping. Now, some of the sentiment stuff has gotten, pretty bad. You look at the investors' intelligence number; it's showing investors very, very bearish. But you know what? There's a difference between being bearish and actually capitulating and selling or getting short, and that's kind of where we are. Yes, they're bearish. No, they're not super short. You need to get super short in order to be a huge rebound, but doesn't mean the market can't go up for a little while. It's not my favorite place to be. Stocks is not where I would play. The things in the positioning report that are showing some signs of this, in particular currencies. The yen has been the flight to quality trade during this move down through January, first few weeks of January. It's the most crowded position out there. I think if you want to play an asset rebound, you play short yen. Some of the other currencies, the Aussie, the Canadian also are showing speculators very short here. They probably also rebound. The Swiss, the Euro, no, it's pretty neutral, but that's not where I would be. Getting back to the commodity currencies, metals is also a place where we're seeing now speculators have gotten very short, and metals have kind of got lost in this. Everyone's been so focused on crude. You don't really hear people talking about metals, but that's where we're seeing the most shorts: palladium, platinum, copper. I'm getting long palladium here. So they look like they're going to rebound. So there's an asset rebound. Gold, silver, there's no crowded positioning there either. So, and those are cars flight to quality, precious stuff anyway. So I wouldn't be involved there. I'd be more involved in the industrial metals here. Currencies are also. Well, we talked about currencies. I'm sorry. Let's get to the energy complex, which is all anybody wants to hear about. Crude, yes, the speculators have not gotten massively short, but they've gotten out of so many longs that when you look at it through history, this is the least long they've been in a very long time. Do I think the crude has hit a low here? No, I really don't. Remains to be seen what happens into a rebound. But look, crude went from 50 to 70 last summer. It went from 40 to 55 later in the year, all on its way from 110 to where we're at now, 29 and change or whatever. So it feels to me like that's where we're at. We're starting to, the last half of the week in particular, we started to hear people talk about, okay, now we see it. Now we see the bearish argument in crude. Iran's coming on board. The cost of production is down here. We actually started to see huge movements in the bonds of these companies. I was surprised to see a lot of these energy companies' bonds were trading at par back in December. Now they're trading at 50, 60. The credit default swaps in these companies have just gone straight up in the last 2 weeks. People are seeing some capitulation in energy here. So I think we got a chance for a rebound there. We're not seeing any kind of crowded short in heating oil, not seeing any kind of crowded short in unleaded gas. We're seeing some crowded shorts in crude finally. So good chance for a rebound coming there too. So if you look at it, if the yen's going to go down and the oil maybe, holds ground here, goes up a little bit, the commodity currencies start to rebound, the metals start to go up, suddenly you're getting, sort of an asset rebound, and possibly stocks will go with it. I don't think they're going anywhere near back to highs. I think, as we talked about before, this is a bear market. In bear markets, you get moves up. It's what kills everybody. That's what kills people, right? The move down, goes back up, they feel okay, they feel okay. Suddenly it makes new lows. They're dead again, rebounds, hold, we've talked about that before, but that's what a bear market is, and that's what I think we're in. And it looks like the rebound is coming here. But again, I'd focus more on the metals. I'd focus more on shorting yen. Also, I want to talk about fixed income. The market somehow is massively short the short end of fixed income. Eurodollars, 2 years, 5 years. More neutral 10s and 30s. But the short end, if you're going to play for an asset rebound here, I would also be long the short end. Great hedge. You could make money on both sides. And those are really the plays for the rebound here. Stocks kind of last. Oil kind of second to last, you know. Metals, yen. And you can play the commodity currencies as well. Okay, so that's sort of where the positioning is telling us here. Looks like we're going to get a bear market rally here. Again, I'm saying bear market rally. Let's see where things are. Should things rebound, let's see where positioning gets. My feeling is we're coming from a place, in particular in stocks, where, okay, they were long. They've gotten less long. If the market starts to rebound, you give it a few week rebound, month rebound, they'll probably get long again. We'll be shorting it up there. But let's see what happens when that happens. You know, certainly if the commodities start to come back and bonds haven't gone anywhere, people will probably get bullish again. And I just want to note that I've been short Russell, long S&P for months and months, and that trades make money almost every single day. On this big move down today, it didn't make money. Russell was the best performer out there. It's only one day, I understand, but it was a pretty significant day. Going into the long weekend and this and that, and everybody want risk off and all that, and China and that. But I think that might be a little bit of a tell. I'm covering that trade. And I think that might be a little bit of a tell. It's the first time we've seen outperformance in Russell in a very, very long time. Again, it doesn't make me super bullish stocks, but stocks certainly should go up should other assets rebound. So that's kind of the play, I think, for the next few weeks. Let's see where the data moves around as these type of things happen. But there it is. All right, good luck.